I am fully expecting a massive washout of epic proportions, and I have tried to protect myself with puts against the US market, and I am long gold.
Please join us for our next live stream, Sunday, July 12th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, July 12th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. We have another first-time guest, Jim Paterson, CEO of ValOre Metals Corp and co-founder of Discovery Group. With 22 years of industry experience, including capital raises, acquisitions, joint ventures, and IPOs, Jim was also the driving force behind a more than $60 million in equity financing for ValOre Metals Corp that led to multiple discoveries. As always, if you are new to this channel or if you have not already done so, please do subscribe, hit the bell to be notified on new updates, and give us a thumbs up if you appreciate what we do. We really do appreciate your support. With all that being said, it's time to saddle up and silver up for Jim Paterson. Jim, welcome to SBTV. How are you doing?
I'm doing great, Patrick, and honored to be here. Thank you.
Thanks for coming on the show, Jim. Really do appreciate it. I understand you're at the beach.
I am.
Okay, I got to figure out how you pulled that one off because I need to sneak out and get there myself. But Jim, given that you're a new guest on our show, let's start with you sharing with us about your background and how you got into the mining business.
Sure. I started out in 1997 at a dual-listed TSX and Amex-listed company called Asco Mining. I was in the closet dialing U.S. stockbrokers, hundreds of calls a day, telling them how great our company was. That's how I started out in investor relations. And anybody who's followed the mining market for a number of decades or years would know that from about 1997 till about 2002, 2003, there was a spectacular trough. There was a total lack of capital. So it was a very difficult business to be in, but it was sort of all I knew with respect to the space. So I stuck at it, and I succeeded through attrition, really. Because I was kind of one of the younger guys in the business, and because of my youth, I was a bit recognizable, and people noted that I was there during the hardest times. So I started getting invited into the room on deals and working with really good people because of my energy, I guess, and just the fact that I was there and there weren't anybody else to choose from. So I started kind of having ever increasing roles of importance within the groups that I was working at. And then I was lucky enough to hook up with a guy I still work today. His name is John Robbins. I started working with him in 2002. And I worked with another guy named Bruce McLeod, who is another industry leader. And so I was lucky to just hook up with really good people. And I was kind of always in a marketing role. And then in 2010, I got my first sort of executive CEO role. I started a company called Corsa Capital, and that's incorrect. I guess I started that company in 2008 and left it in 2010, but it became a going concern. It's called Corsa Coal and lives to this day, although I'm no longer involved with it. And we, John Robbins and another gentleman in Alberta formed this group called Discovery Group in 2005, so sort of formalized the group that we were in. John and I relaunched that Discovery Group brand in 2016, and so now we're kind of involved with multiple companies in Vancouver, Canada. We've got projects all over the world, and we're kind of, I guess you'd say, commodity agnostic. So we're really looking for value, not really focusing on certain types of minerals or metals, but just looking at what the opportunity is for a specific project. Or in some cases, we are presented with a really good team, and that team is looking for a home, and they're looking to sort of be involved with us as a group. So, I guess to summarize, I've always been in marketing and leadership in the mineral exploration business, and I guess you'd say we're kind of a venture capitalist, a very unsophisticated venture capitalist.
Jim, in the last bull market for gold between the early 2000s and 2011, gold miners inflated their capital expenditures and paid out large salaries for management. When the bear market started after 2011, many companies had to cut their budget pretty severely. Uneconomical mines were sold or put under care and maintenance. Can you share with us an overview of the financial health of the gold mining sector in the last few years?
Well, the large gold miners and the mid-tier producers, so not the junior explorers, but those companies that were actually mining the ore and selling the product, were punished because of their salaries, as you were saying, and not only the salaries that were exorbitant, but also in a bull run, what happens is money rolls into a sector, and bankers and large shareholders and management teams start to get pretty enthralled with themselves and their abilities, and they are looking to be the biggest and the best, and so they start to ignore realities of projects. And so what happens is money starts getting allocated to projects that don't deserve money, they don't deserve investment, and they're not a good idea, and they're shown to be terrible ideas in the bear markets when people look at these assets and say this is not going to work. But in a bull market, they say, we can do it. Let's just get after it. So that's what happened the last time. And then after 2011, the market was so bad for so long that really the strong survived. Boards were very hyper-focused on cutting costs, making smart investment decisions. And so they did that. And now that the gold price is rocking again, and the input costs are low, and they've exerted capital discipline, that means that they're going to have some spectacular quarters right now, starting even during COVID, this crisis. Some of these mining companies were just printing money. Gold price was supportive, and costs were low, and the right projects had been financed.
Yeah, that's going to be my my next question. Where how has the gold mining sector fared this year, even with the bug going around?
I'd say great, and I'd say the amount of capital available for precious metals specifically. There's been some interest in the last little bit for copper projects because the copper price is supposedly rocking now, and that's great, I think, because that suggests some confidence in the near term and the midterm for the economy. But the precious metals producers and even the precious metals explorers have had no trouble raising money. Basically the brokerage firms and the public companies just switched to Skype and Zoom and Microsoft Teams, and they had these virtual road shows. And the capital raisings have been fast and furious. In our group alone, we had several bought deals put to us by Canaccord Capital as a lead, and they were significant, over 30 and 90 million. And in both cases, they were that was Bluestone and Great Bear, which are two companies in our group, Discovery Group. So those were, in both cases, they led with a financing amount, and it was massively oversubscribed. So there's a ton of capital right now being allocated, and it's because of the financial health of the big guys, the big mining companies. But it's also, I think, because people think gold's going to really rock in terms of pricing.
What's the latest you've heard regarding mine closures due to measures taken to restrict the spread of the virus? And are mines back to full operations yet?
It depends on the jurisdiction. And I haven't read recently. There's a really good note that I was reading actually more and more in March and April that was really top of mind. But there have been closures. I think for the most part they're trying to get back at it, and some have sort of been at 50% capacity. The others were not slowed down at all, and some were completely shut down. And I think it really just depends on, first of all, the country and the rate of COVID in that country. Secondly, how the project is located relative to large population centers, and logistically, how are they getting supplies into that mine, and how can they protect the workers? Because, in certain areas of Brazil, for example, you might have real issues. In other areas of Brazil, they're far enough away that they're able to operate without really being affected. And so it's a whole range. That's a big question. It's a whole range of things, from the policy of the federal level right down to the logistics of the actual mine. But certainly, like the uranium sector was very affected because that's highly concentrated. I'm not sure if you've interviewed anybody in the uranium sector before, but I think that's a very interesting one because, there, in terms of the production of the ore that is used for nuclear fuel, it's highly concentrated in a few different countries. So, and generally they are located quite far away from population centers. So if there is a safety issue, they're really plugged up. There's a bottleneck, and that's what has happened in the uranium sector, where they just shut down production from like Canada, which was a big component of the uranium being produced, and it's just off the market. So the supply was severely disrupted.
How about the situation with gold exploration today? Are sizable gold discoveries increasing, decreasing?
Yeah, I felt like it's not a direct correlation, but if there's capital available and that capital is going to really good teams, I think those good teams are going to be making good decisions on which projects to allocate that capital. So you're going to be finding more. There's a company in our group, in Discovery Group, called Great Bear. I'm actually wearing the shirt today, and that company had a market cap, let's say 2.5, 3 years ago, of let's say $3 million Canadian, and it tickled $1 billion market cap on Monday, based upon what they've been doing in terms of drilling and the results they've been getting from the field. It is a brand new discovery in an established mining camp. So there are discoveries being made. I think right now, I don't track it as much, but just because of where it is. But I think a lot of really good things are happening in certain African nations as well. There's lots of really good exploration programs going on there, and typically those companies will be listed in London or in Australia, and not as much in Toronto or Vancouver. But so I don't have a lot of experience with those kind of companies, but I am noting that there's just a lot of really good activity, and they're finding gold deposits, which is great. And they may not be monstrous gold deposits, but a couple million ounces of readily mineable gold. It still makes a pretty big impact and gets the investment community all whipped up.
Okay, yeah, I just had to ask that question because we hear from time to time people that are saying we're at peak gold. So I was just curious, are we at peak gold in your opinion, or as you said, it really just there's a correlation perhaps between how much money there is to go after projects and explore?
I did see an email that actually showed sort of how much gold in a cube it would take to compare to certain just landmarks or amounts of money, and so, or a football field or something like that, just to kind of get a relative size. And really, the amount of gold discovered and mined and existing above ground today is very small amount compared to other volumes of product that you might think of. So it's and we'll get to this later, but it's super hard to find a deposit, and then even harder to develop it, and then harder still to produce it. And there are it's just a massive graveyard of public companies and prospectors that have perished in the search, and in the activity and the chasing of these deposits to find a mine. It's just extremely hard. So what you're referring to in terms of peak gold, probably the easy deposits have been found, and that is true. So that would mean large, high grade near surface. Maybe they have been found because humans have been crawling around everywhere for thousands of years trying to get this precious metal. But there are deposits like Great Bears, which are literally 15 minutes from a town that serves coffee and burgers and has several mines there. There's highways and power lines, and it just happened. So it is possible, but it is rare. But the techniques and the technologies they're coming up with right now from other industries are allowing, like artificial intelligence, and the oil and gas sector has created an ability to see deeper and deeper into the earth. So they're going to find more deposits because they're there. They just might be hard to find to extract because they're up in the mountains or under the sea or deep underground. So there just be more of a challenge to get them out of the ground, but they will be found.
Speaking of oil, how big of an impact does low oil prices have on the mining business? Are mining companies locking in prices now to secure future oil supplies?
I would imagine they are. I don't know for certain company by company, but I would think that once they got over that immediate panic that they might have felt in March or April, and they realized that they could raise money because the gold market was looking to really set to take off, and they had capital available, they probably looked and said, okay, we're able to raise money, we'll get through this. Now let's make some longer term calls on securing lower prices for some of our inputs. And it's a huge amount of the operating costs. So I would think that the bean counters in several of these companies were feverishly calculating the risks associated with going long and buying input and the materials they would need to operate their mines. And probably that was one where they decided, let's just buy it and store it, and their costs, and it'll reflect in the margins. I think this year, 2020, is going to be pretty banner for a lot of these companies.
You're connected into the gold mining industry, of course. We have a bunch of burning questions about gold mining that we hope you can help shed some light on. One of them being, which aspect of mining do you consider the most challenging aspect today? Is it the exploration part, raising capital, navigating jurisdiction risks, etc.?
All those things. It's if looking back on my career, and I've survived in this business, but I didn't choose a very easy one. I actually probably chose the hardest. And it's just, there's so many, it's really ironic because everybody on the planet is effectively a consumer and thus an investor in the mining sector with all the stuff that they buy. If they live in a home, if they drive a car, if they fly in a plane, unless they wear hemp clothing and they ride a horse with no horseshoes, they are a consumer of the mining industry and they're an investor because of that. But even though that is the case, they don't think they are. Many people are completely against mining. They're completely irrational in my mind. I mean, you're in Singapore, look around at all those buildings. It would not be possible without the mining sector. Yet some people that live in those apartment buildings will protest mining ventures. So that blows my mind, but that is the case. So that's difficult. That aspect's really difficult of it. Just misunderstanding of the sector. I think that Canadian companies in particular are super focused on health and safety and environmental standards. And whether that was based on some bad apples getting caught and the rules and restrictions being quite heavy, nonetheless, they are. And I think Canadian companies try very hard to comply and exceed. But if you look at the mining sector versus like the oil and gas sector, when the oil and gas sector drills a hole and they've hit a deposit, they start getting paid then. In the mining sector, when you drill a hole and you hit gold, for example, now you have to drill 300 more holes to define the ore body. And along the way, you might determine that you got lucky with the first 50 holes. And the remaining 200 you keep missing. So the more holes you drill, the smaller the deposit gets. I mean, it doesn't actually decrease in size, but your understanding of, or you had this kind of idea of what the size of the deposit was. But as you got more and more information and your data was more refined, you realize that you were kind of overinflating the size of it, say. So it's very difficult. And then once you drill it off, then you have to start doing all these feasibility and engineering studies that can cost $50 million, depending on the kind of project it is. And that's just to kind of figure out what you have. And then you got to pay to build it. And you got to kind of navigate all the jurisdictional and environmental hurdles and the permitting hurdles to put it into production. And then once you're in production, you hope that you nail the commodity cycles right. And that's a big thing, particularly with not as much with gold, because a really, really good gold deposit is always going to be in great demand. But sometimes a really good uranium deposit or a fantastic nickel or copper deposit is ready to go at the wrong time in the cycle. And so the company that spent all the money to actually get it to that stage where they can actually start monetizing or mining and extracting, they just can't get the money together to put into production. Or if they do, they are selling at a loss. So all this 15 years of work and all this capital and everybody, all the shareholders just get flamed because the timing was off. So those are a few of the challenges that we go through as a sector. And so the group, Discover Group, that I'm part of, we focus on the front end of the sector. So we're trying to discover the deposits. And then if we succeed, our win for us is to get to a stage where a team that's really good at either developing or producing or running operations in the sector, they can take over. And so, it doesn't always happen. There's a company in our group called Bluestone that we financed. We've got a really good team we're developing, and Bluestone is actually putting a gold project in Guatemala into production. But that has a very purpose-built team around it. You need that. So you need people. So that's generally why major mining companies will wait until the junior company like us or the explorer does all the hard yards and proves everything up and delivers it to them on a bow, and they're able to pay a bit of a premium for it because they will avoid all of the risk associated with getting it to the stage where it's a defined deposit, it's been permitted, let's say, it's been socialized in that country, and then the locals seem to be okay with the mine, and the government and the taxation is clear enough that they'll understand what they're getting into, and they'll say, thank you very much for your efforts. We'll pay your shareholders handsomely, and it's ours. If you get the cycles wrong, sometimes you get it all ready to go and there's no bid because, let's say, the zinc market is down at a terrible low or in a trough, and a big opportunistic company will say, thanks for all your hard work. Unfortunately, we don't really want this. It's the wrong time in the cycle. We'll take it off your hands, but at a great discount. And that's very frustrating. So it isn't easy. There's lots of risk. I mean, it's a tough business, but when it works, it's really exciting, and it kind of keeps us getting up every day.
Can you give us an idea of how much gold is obtained in the ore that is dug out from the earth? What's considered high or low grade ore?
It depends upon the type of mining method. So if you had an underground mine, you would need substantially higher grades than if you have an open pit mine where you're going to mine, basically move earth, dump it on a pad, sprinkle some cyanide on it, percolate down, you'll capture in these pads gold. That's a very kind of cost-effective way of doing it. So you can have, depending upon the area of the world, you can have half-gram deposits, you can have 1-gram deposits, and maybe a 2 or 3 gram deposit for that type of mining operation, depending on the size, would be really high grade. Other mines, if they're underground, you're going to need really juicy grades. So might start measuring it in ounces, not in grams. So half an ounce, 1 ounce, 2 ounce. Generally, they'll be over. You can look at the drill results from the companies, and they'll generally be over much narrower intervals, but they'll be higher grade. So very rarely do you get the open pitable high grade. You won't get like a 2 ounce deposit and 10 million ounces in an open pit scenario very often, just because that's sort of like the holy grail, and there aren't many of those. And so that, what is high grade? High grade depends on the country, the mining technique, the deposit size, how much scale can they get, and it's all relative. What kind of project is it? Where is it? And I think that's one of the things about the analysts that work for these different brokerage firms is that's what they're paid to do. They're paid to give their clients perspective. So if this new company is saying we've got the greatest thing in the world, let's compare it to things that are let's compare apples to apples. Is it the greatest thing in the world, or is it sort of an also-ran, or is it actually a really poor competitor? And they'll just put together a chart or a table and say, here's where it sits.
Can you give it to us straight? Because we hear this all the time where we see the silver to gold ratio by price as being, 90, 100 to 1, 100 silver ounces to 1 ounce of gold. And then we hear the miners saying 9 to 1, 8 to 1. So what is it really, the silver to gold ratio coming out of the ground? What are miners seeing?
Well, it's a good question, because if that's what people think, I think it's inapplicable. It's not applicable, really. I mean, on a deposit by deposit basis, there isn't a general gold to silver ratio. There's evidently a gold to silver ratio, because there's got to be a lot more silver, or it would be worth more than gold.
Jim, how long does it typically take for gold to be discovered? As you said, there's a process it goes through, from exploration and so on. Then it's mined, refined, minted into a coin like the Canadian maple leaf. How long is that process?
Well, I can tell you that I don't know much about from the refining to the minting process. So I would think that that's actually relatively quick versus the timeline that's necessary. So if your viewers want to really be frightened, they could look at the facts in terms of how many companies, what we call prospect. So that is a deposit or some sort of showing of interest. With my daughter. There's a mineral, let's say a small mineral deposit that's found. That would be called a prospect. So of the thousands of prospects that are found and people get excited about, only one becomes a mine. So one in thousands and thousands and thousands. If you're lucky and you take that one prospect that will become a mine in the future and say, how long would it take to get it from I found it to we're cutting the yellow ribbon, it can be 15 years. And that would be if everything went right. You caught the site, what I was describing before, you found that prospect in an area of the world that there wasn't a NIMBY problem. There wasn't a not in my backyard problem where people said, we enjoy metals and mining, but we don't want metals and mining in our area. So they didn't shut it down. And you got it right to the finish line. It's probably 15 years.
So that means a 2020 gold coin that I may be holding in my hand today was actually dug out of the ground in 2005.
Well, more than likely, it was discovered, that prospect was discovered 30, 35 years ago, because it came from because it would have come from an established mining camp, let's say in Canada. Many of them were discovered 50 years ago, 100 years ago. And so, they've continued to produce. So, one of these, the beauty of the mining sector, though, is that camps are very sustainable, and a camp would be an area where there's multiple mining operations over a huge scale or distance. And so they keep finding more and more gold, and they already have paid for the infrastructure, and the locals are trained up in terms of the workforce, and everybody's behind the mining operations, and they're finding more, and they're able to continue to develop and produce them. So these things produce for many, many, many decades.
Given the immense productive effort needed to produce a gold coin, how do you feel about the fact that digital fiat money can be easily created today?
How do I feel about it? Digital currency, I'm getting more and more interested in, just as a kind of an alternate to fiat currency. But fiat currency for me is just, I guess leading up to this interview, you had kind of that question, like how long does it take to get, what's involved with getting a gold coin to market versus fiat currency, and all the stuff that I just described, all the difficulties involved, and all the failure and all the costs to get it to market, that gold coin. And in the last couple of months in the United States, the Federal Reserve has, with the push of the button, just massively expanded money. And it was so easy. And that money just flowed right to, it was very exclusive though, where it flowed. So massive amounts of capital went boom to a certain group of businesses. And my feeling is, if you are given something for free, how much value will you place on it? Very little.
I mean, I'm sure you see it too, where guys are starting to think, well, why should I even pay taxes anymore? They can just go ahead and create that money for me as well. When the gold price goes beyond 2,000 USD per ounce, how do you think the gold mining industry is going to look like? Or are you guys going to be breaking out the champagne and partying, or what's it going to look like there?
Absolutely. We do that regularly anyways. No, I think it's all with, again, there's not a direct answer to that, because I think, people, there was an active sector but it was very reduced. There was a lot less capital flowing to it, but there were actually gold mines operating when gold was less than $300 an ounce. And those, you got to think, if in a 2000 gold environment, what are the inflationary impacts on all the inputs? Like, what are fuel prices and rebar prices and labor prices and all these things that go into it? It really doesn't really matter about that gold price with respect to mining. It's the margin. So a strange thing was happening during Corona, this impact the last few months, where the price of fuel, for example, there were times where we were all hearing about this negative price for fuel, and obviously fuel prices were getting crushed. That was huge for the mining sector, because despite a little stumble in gold value, really the gold price went up. And so they were selling their product, which is gold, at ever increasing prices, and their input costs were going down. So they've got major margin. And so that may not continue if they, all the Fed, like the banks, the central banks around the world, in every country where possible, if all they're doing is printing their own currency, they're going to devalue that money. They're going to create inflation. The gold price will go up, but everything else would be more expensive too, I would think. I don't know, but the risk is that it will. So it's all about margin, not just the top line price. Last 6 months, though, the input costs went down and the price of the metal went up.
Yeah. I mean, speaking of these markets, I mean, do you think there's a disconnect going on between what we're seeing, daily, how the markets are rising, but yet when you look at the true economy with what's going on, is there a disconnect in your view?
Yes, I totally believe that. I think that the information, as a public company executive, I will be honest in saying I've written lots of news releases or been involved with lots of news releases, and lots of humming and hawing happens before you put your news release out. And we are messaging things to the marketplace. That's what news releases are. And so I get messaging pretty darn well. And when I see things like, for example, they're having these things, you probably read it on CNN or CNBC, where they're saying initial jobless claims, and then they're saying that the unemployment numbers and so forth. And it blows my mind. They'll say things like, well, we thought things were going to be terrible, but they only are sort of bad. So actually that's good. And so the news is good. And you think, well, that actually, no, it's just really bad news. You just expected it to be worse. But you're saying to the people, those people that are consuming the information on CNBC, hey, we were surprised to the upside. And then they conflate that with, this is good news. So the market jacks. And I think, no, like 30 million people are out of work. That it cannot be good news regardless. The other thing, with the whole coronavirus, I would like more information and more context. And that's just my opinion. Maybe I overanalyze everything, but break it down for me, like every day. How many people are dying from suicides or alcohol? What the alcohol addiction or the drug addiction or the helpline calls, are they spiking as these number of cases, and how many people are contracting it? How many people are dying from another cause, but they have coronavirus? But they're dying from something else, but they just happen to have corona. And now you're saying they died from corona, or what is the age bracket? All these things. I'm pretty fact-based. So that would be good for me to know that information, and I can make my own decision whether I should be wearing a diaper because I'm so scared I'm going to soil myself, or saying, you know what, it looks to me like it isn't as scary, and we should maybe rethink this. On the economy, in particular, I saw something like, the number of the new employment numbers for June jumped. And I would like to see what it was like in June of 2019, just as context, which I haven't done. I just saw it this morning. I didn't look into it because obviously there's a jump in the hospitality sector when everyone's out of school and going to the beach. Hotels are opening and restaurants are opening. Kids are leaving school and they're getting hired for the summer. So that must happen every year. So is this jump in employment numbers? How does it rate against 2019 and 2018? Let's give us context so we can make our decision instead of just spoon feeding us information that it is positive but not maybe realistic.
Jim, what is the most important issue that you feel is under discussed today that will have a profound impact for the rest of the year?
For me personally, it's personal liberty. And I think that I believe that every man, woman, and child on the planet has enough brain power to take care of themselves and be sustainable, and deserves and merits freedom of thought and freedom in general. And I think we can. But with that, I think that that there's lots of responsibility with that freedom, because you can't say I want freedom, but I want other people to take care of me financially. That part I don't want freedom. I want someone to take care of me, but I want to be able to do what I want. I think they don't mix, right? So I think increasing personal liberties, and I think that with what's happening right now with Corona and the economy, we're going absolutely the wrong way. We're totally going the wrong way. We're actually, our personal freedoms and liberties are being constrained. So that to me is a major issue.
Are you expecting a financial crisis maybe similar to 2008 where banks teetered on bankruptcy to happen soon? And how detrimental do you think it may be, or beneficial might it be towards the mining sector?
Some elements of the mining sector will be dry. So my personal opinion is I am fully expecting a massive washout of epic proportions at some point. And I have personally tried to protect myself in my own portfolio with puts against the U.S. market. And I am long gold. So that's me. That's personal. I am dumbfounded by the market reaction to the last few months. I can't believe it. But that's what happens, I guess, when the Fed goes into the market and buys everything they can. The market starts rocking, but it's false in my mind. It's not a real thing. So I'm frightened that we could have a washout. So I'm protecting myself accordingly, as I said, but it will really affect certain miners depending upon the commodity they mine. So if there's a massive washout in the economy, that means that the commercial or the industrial uses, like those metals that are used to build infrastructure, let's say, and or to kind of support the economy, may have challenges. The wild card there is if they print money and build bridges and build office buildings that no one uses, but they're just building to build and they're printing money to do so, it'll have this massive inflationary effect and those minerals will be used. So, and that's just what's happening kind of in the marketplace. It's like not a free marketplace right now. So I can't really get my head around it. In an inflationary environment, though, if there's a massive washout and they just keep printing money, I think the value of gold will be very easy to see. And I think people will flock to it. And then the speculators will roll into the mid-tier producers and the junior explorers. There'll be a huge capital pool and there won't be enough product in the form of junior explorers or exploration companies. And the shares prices of those companies will probably be influenced positively.
Jim, before we wrap up, can you let our listeners know more about Discovery Group and its track record?
Sure. So if they go to discoverygroup.ca, they can see the companies in our group. We've got 8 public companies with another group joining soon. And I think the track record has been one of success. There have definitely been failures because of all the stuff that we talked about earlier, the challenges in the marketplace. But I think we've had more luck than most, and we've got really good people. So the group serves the purpose to attract really good people and attract good project or deal flow and capital. And some of the successes we've had back in 2016, we sold a project called Coffee or a company called Kaminak to Gold Corp for about a little over $500 million, $500 million. We acquired a project called Sterling via a company called Northern Empire Resources Corp and sold that for about 13 million, and then we sold it to Core Mining for about 117 million a little over a year later. We acquired a project called Cerro Blanco down in Guatemala from Gold Corp via a company called Bluestone. That company now is very well financed. Lucas Lundin and his group came in and financed it and have been bolstering the team. And that company's got close to $250 million market cap today. And then Great Bear Resources, the shirt I'm wearing, as I said, it was a discovery. That was really a discovery story where some really bright minds, Bob Singh and Chris Taylor, had a project called Dixie in the Red Lake Gold Camp of Ontario, and less than 5 million in market cap. Actually, at one point, I think it was $1 million market enterprise value within the last 3 years. And as I said on Monday, it tickled $1 billion Canadian in market cap, which was spectacular and a very big milestone for our group.
How should investors decide which of the Discovery Group's companies they should invest in? I mean, you have ValOre Metals, Great Bear, K2 Gold, etc.
Mm-hmm. Well, we love all of our children equally. We think they're fabulous. No, I think I think this would be profoundly good if they just started tracking the group, because we have all the individual companies have their own management team and board of directors. We're not running 8 companies at all. We don't run them. We want to build teams that are self-sustainable and can do their own thing. And as I talked earlier, that they may have, an investor may be a contrarian investor. So they like saying, I'm going to go long right now zinc, because I think right now zinc is discounted and will go up in price. So we have a company called Fireweed where they could step in and wade into the market. They wouldn't have a lot of competition for the shares because it's out of favor. Other companies, hot gold play right now, there's going to be lots of volume, and that's more kind of mainstream in the mining sector. So, following the group, and we put news releases out, or we post things on social media to give people an update, and just follow what we're up to. And I think you'd really need to know what your own investment style is. And we never know. I mean, we're a discovery group for a reason. We're out exploring. And sometimes the surprises are spectacular, like in the case of Great Bear. But 3.5 years ago, we were having trouble raising money at 15 cents Canadian per share. We were having trouble doing that. And it almost hit $20 on Monday a share. So, looking back, saying, well, why wouldn't you buy all you could at 20 cents Canadian a share? Well, at the time, it was a total unknown. So that is sort of the magic of our business, that there is a lot of failure, but when success happens, it's just unbelievable. And that's what keeps us going.
15 cents. You know how many people are going to be kicking themselves in the head right now besides me?
But I'll tell you, if I called you at that time, you would have said, seems pretty risky. No, thanks. Call me on the next one, because I can assure you that happened a lot.
How protected are investors of Discovery Group companies from stock dilution?
You're to be honest, you're not. It's really you're not protected against it, because they're not cash flowing enterprises. So they are explorations. And because of that, if you have to look at that and you say, well, if this company isn't generating revenues, it means when it wants to expand, it's got to sell more shares. So there's going to be dilution that happens. In the case of Great Bear, it was small fundraisers followed by really good exploration results, sort of reduced dilution dramatically. And the gold price was sort of helping. So that in that case, there was very little dilution. But in other cases, if the company has to kind of weather 3 or 4 cycles before the discovery happens, there will be dilution that happens along the way. It's just unavoidable unless you want to sit and do nothing. So you invest in a junior exploration story, a pre-production story, because you like the excitement of what discovery or advances, just like if you buy a biotech company, you want that to be a massive cancer discovery to happen, a gene therapy or something like that works, that passes all the FDA milestones and is bought by Merck or something. That's the game that is similar in the mining sector, where, are the scientists doing the right things to make the discoveries that will be attractive to the marketplace, and specifically a major mining company. And if they're doing it at the right time in the market, there'll be less and less dilution, but there will be dilution.
Lastly, how are investors assured of success when they invest with Discovery Group? I mean, how, from the viewpoint of how are the risks mitigated with Discovery Group's approach to mining?
Yeah, because it's not assured, obviously not. It's a really risky business. So don't mortgage the farm. But I have mortgaged the farm myself. And, it worked out well for me, but along the way, there was a lot of panic, and I wouldn't wish that upon anybody, to be honest. But I think that we as deal makers get better and better. So, we've been at this for a while, and particularly the principal, like the main guy of the group is my partner, John Robbins, and he's just an amazing deal maker. He sees a good deal and he knows it when he sees it. We have really, really, really good technical people that are working that are attracted to the group, and really good people make better decisions than goofballs or people that are inexperienced, right? They're going to make better decisions. And because they make better decisions, they're respected more, they have more credibility, which means we will be able to attract capital. And because we're able to attract capital, that means we're able to do things right and use the best and the brightest innovations, and drill more holes and learn more and gather more data and make better decisions because of that. And then the final thing, because we've got these great people and we're able to raise capital, that means we get the best deal flow. So people that have a gold project in some place of the world say, we've got to go talk to Discovery Group because they're making things happen. So we get actually more deal flow, which means we can be more discerning. Don't want that one, don't want that one, we want that one. We want to take a risk on that one. We're able to negotiate a good deal. We're able to put the right people to it. We're able to invest the appropriate amount of capital to advance it. So these are all things that reduce money, because if you have the wrong people and you're underfunded, and you're underfinanced, and you're always behind the eight ball, you're going to start making bad decisions and you're going to have less chance of success.
Jim, we thank you for coming on the show, and we wish you all the best.
Thanks, Patrick. Great honor to be here. Have a great day.
You too. Thank you, Jim. Appreciate it. That was Jim Paterson, CEO of ValOre Metals Corp and the founder of Discovery Group. For more of his insights on the mining sector, please visit discoverygroup.ca. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.